Angel is brought to you by LinkedIn. You already know LinkedIn as the world's largest professional network. It's also a better way to find great talent. Go to linkedin.com/angel and get a $50 credit towards your first job post. Terms and conditions apply. And Embroker. The Embroker Startup Program helps startups secure the most important lines of insurance at a lower cost and with less hassle. For guaranteed 10% off on premiums and up to 20% depending on quote, go to embroker.com/angel.
Hey everybody, welcome to Angel, the podcast. This is a podcast that goes along with my book, Angel, which you can see behind me in some of these places over here, which has been translated now into 3 or 4 languages: Japanese, Chinese. It's in English. You need to translate that. It's coming out in Italian, Greek, Swedish, Spanish, French, German. I'm just showing off now, but the book is on a tear. If you haven't read the book, go get it and listen to it if you want to, because I read it. If you happen to like the sound of my voice, you can go buy the book. We also have a companion to this, which is Angel.University. That is a half-day class where we teach people who have between 0 and 100 investments how to be a better angel investor, or how to think about angel investing, and just to share our best practices. This podcast is for free. The book is $10 or $20, depending on when you buy it, or you can get it for free, audible.com/twist. And the university is $500 because we take everybody to dinner, and that costs money. We got to fly across the country. I'm really excited about our next guest. We've been working together, investing in companies together, and he's one of the hardworking early stage investors here in Silicon Valley. His name is Charles Hudson, and his firm is called Precursor VC. Before that, you were at SoftTech?
Uncorked, that's right.
Uncorked, right. Previously SoftTech with Jeff Clavier.
That's right. I'm still teaching myself to say uncorked. So
Uncorked, yes. And Jeff, of course, was on season 1, I believe, of Angel. This is our 3rd season. Thanks to our partners, by the way. Every time we get 2 great partners, then or 3, we launch another season of Angel. It's our 3rd. And the goal here is to teach people what we've learned through our mistakes and through our hits. Looking at your list, boy, Charles, Postmates, Superhuman, yum yum, Style Seat, About.me, lots of great wins in here. Tell us, how did you meet? Welcome to the program.
Thank you.
You come to everything. We are like, you come to the barbecue.
I'm a Jason fanboy. I come to all of your events.
Yeah, I appreciate that, Charles. Well, we ask you to come, and you're good at what you do. And your early stage. And so that's kind of our sweet spot. I really appreciate the time you spend with our founders and that you're coming to Sydney with us. Thank you for that.
I'm looking forward to it. It's going to be awesome.
Is that your first time?
Yes, it will be.
Oh, awesome. So you'll love it. And it's really like I think there's been 2 unicorns down there. I think there'll be more. Canva. And before that, Atlassian, obviously. And I think there's another one in the fintech space. I'm not sure the name of it, but I'm looking forward to meeting when I get down there. How did you get into angel investing? How did you get into VC investing?
So my first VC job was right out of undergrad, actually.
Oh, really?
I worked for the CIA's venture capital group.
In-Q-Tel.
That's right, In-Q-Tel.
How did you get the job at In-Q-Tel? Were you like one of these Stanford, Harvard kids?
I was a Stanford kid, and I was interning.
MBA or undergrad?
Undergrad, and
Major?
I was an econ and Spanish major, which is, of course, the typical path to becoming a venture capitalist is to do a foreign language.
Mexico's economy disaster. Okay, well, we'll fix it. We'll fix it. It's okay. Sorry, I'll stop my first Les Trump impersonation for the episode. Really, Spanish.
I was really into Spanish in high school, and I liked languages, and I came to Stanford, and it was a relatively small major by units. So I said, I think I can do econ and Spanish together.
Wow.
And it was a lot of fun. My original dream was to go to Latin America and be a development economist.
Wow. To be a development economist.
Yeah.
Isn't it interesting where we think we're going to go and then where we wind up?
Life has a way of showing you the path. And
exactly.
I talked to my thesis advisor, and he said, to do what you want to do, you need to get a PhD in economics. Yeah. There's this other thing called business that I think might be a better
fit for you,
given your performance in upper level microeconomics classes. And so I ended up interning at Excite at Home.
What?
Yes.
With George Bell?
With George Bell. Yes, with George Bell.
You can't drop any reference on here, Charles, without me knowing, okay? I was a journalist before this. How dare you? You drop a reference, I will drop a follow-up. George Bell, Excited Home.
Excited Home.
Megan
and
Carmichael worked over there.
Megan Carmichael, Jeff Doniker, Joe Kraus, Raj Kapoor.
Raj Kapoor.
These people were all, the Classifieds 2000 group was like the real powerhouse of like brain power.
They bought Lycos.
Mm-hmm.
Everything.
It was a lot of fun.
Yeah, that's the late 90s.
Late 90s. So before we even had the word unicorn, we just had, you know, large.
What did you do there?
companies.
They just like had you as an intern or something?
I was an intern on our This is probably, you know, talk about no job too small. My job was, we had this nascent e-commerce channel where a couple of our brand partners would give us products to list. My job was to keep track of which products were selling on the site and then rotate through the site, different products every day. So partners would call and say, hey, we have a new backpack. Can you put our backpack on the front page?
Got it.
So
this is the portal era. People forget, but the thesis of the internet in the early days was that there would be a number of starting pages. So because the Mosaic browser or Netscape had its own start page, the Netscape start page, the AOL start page, and the Excited Home start page, these would be valuable real estate. Everybody used the metaphor real estate. It turned out that didn't matter eventually. Start page didn't matter.
Turned out search was the big deal.
Search was the big deal.
Yeah, turned out search was pretty important. But when I was an intern, I sort of kept finding projects to work on. And I was all set to move to New York and work in Wall Street finance or go to Denver and do money management. And I went, I know.
Both of those sound horrible now that you mention it. Okay. Wow.
And the last minute, my mentor at work, I went to her and told her, hey, I've really enjoyed working at Excite. This has been great. I stayed on my senior year after I'd been a summer intern. And she said, hey, my husband has this venture capital firm. He's got about $30 million a year from the CIA, and he needs some help. Before you take this job, just go have breakfast with him and just hear out what he's talking about building with the fund. Maybe he could use somebody like you. And that's how I ended up at In-Q-Tel. I met Gilman Louie for breakfast, and we had a good chat.
Gilman Louie, wow.
Who's gone on and invested in some great companies like Niantic.
What was the thesis of In-Q-Tel, and did it turn out to be correct?
The thesis was even more accurate than we thought. So the government's, the CIA's thesis really was, we have all of these products that we buy where we are paying full freight to have them developed on our behalf. There's obviously some things where we have to pay full freight because the customer is us. There's no second or third customer. But you think about
customized software.
And they're used to buying it from big government contractors. And the thesis was, hey, what if we could instead find commercially available software where we could be one of many customers, not have to pay for all of the development, benefit from the commercial market, get better pricing. And to the extent that we need to do special things with that behind the scenes, we'll treat those as customizations.
Right.
And the other big epiphany they had was, in the late 90s, every VC said, don't sell the government. Government's a bad customer. They're hard to deal with. Slow, hard rules, underpaid. Like, it's really difficult. So the thesis was, if we can make it easier for the private sector to deal with the CIA will get access to more private sector technology. And that yielded a bunch of interesting investments, ArcSight, Decrew, Palantir, Keyhole, which was the foundation for Google Earth. So
that's fascinating. It's also so forward thinking. You think about the society we live in where capitalism, democracy, et cetera, are kind of co-joined. And this idea that the CIA, which is here to protect America from foreign interests that want to do bad things and keep us abreast of what's going on in the world, would back and have a great working relationship with technologists through investment as opposed to authoritarian instruction. It's really like unique and wonderful, I think.
And it was 25 years ago.
It's 25
years ago. And I give the people who put the program together a lot of credit for being forward thinking and being aggressive and running the experiment. And I think it's hard to run experiments in the government.
Clearly, yeah. Even when we have functioning governments. So what is your thesis for Precursor? And what is the average check size? And what is your Goldilocks zone sweet spot
I'll
for
just
investing?
tell you the brief history of how Precursor came to be. So I started working with my old partner from Uncork, Jeff Clavier, at the end of 2010. That's when a big seed fund was like $55 million.
Giant.
And between 2010 and 2015, when I left to start Precursor, seed funds doubled or tripled on average and got much closer to $100 million in size. And that meant there was this new class of entrepreneur who really wanted $1 million, didn't have anything, maybe a prototype, maybe an idea, maybe a rough working version, but no real traction.
Yeah.
And they needed $1 million to hire a team and figure some things out. And when I think about what Poshmark looked like at Uncork when we invested, they were pre-launch. Postmates was very, very early. There were a handful of companies that we met where, because their capital needs were small and our fund was small, there was alignment. And what I noticed is the seed ecosystem was just becoming more often the second check you got in your company's journey.
Ah, interesting.
So I said, okay, well, somebody, and it's funny, Jason, I'm sure you'll appreciate this. This was a message I was getting from entrepreneurs.
Right.
They would come to me and say, I'm talking to all these seed funds. I thought you guys wrote my first check, and now I understand you don't.
Right.
Where do I go to get the check you used to write? And I'd
Yeah.
say, if you're lucky enough to know good angel investors, do that. But if you're a disconnected founder, maybe you are a mid-level person at a big company, you might not know any VCs.
Right.
You might not know any angels. And I said, there's this huge underserved chunk of the market where they just need someone to believe in them and provide them with capital and some mentorship and advice. And I think we can make that model work.
All right. When we get back from this quick break, I want to understand how you decide, given there's so little to go on, how to be what I'll call the seed classic, the classic version of seed, when we get back with Charles Hudson on Angel. If you need to hire somebody, go to LinkedIn. That's how I'm finding all my great people. Charles, who works with us in the studio and records This Week in Startups, we found him. He had a full-time job, but he was a passive job seeker. What that means is he wasn't out there actively looking, but when he was on LinkedIn getting messages from his friends and updating his profile and reading the news, he saw an ad for the studio director position for This Week in Startups. And he said, that looks interesting. That podcast, I listened to it. Oh, wow, they have an opening? Let me take a look. Let me just browse through this opportunity. And you know what happened? He clicked and he applied. And we found somebody who wasn't looking for a job. In a low unemployment situation like we have in the United States, if people are out there looking, they're the last 2 or 3% of people who are trying to find jobs. I mean, they might be the least qualified, or maybe, they're not, they don't have as much experience. The most experienced people are in high demand, and you want to find those passive job seekers, and that's what we did. We have hired, I think, 3 people now. Our marketing manager, Maureen, up in Toronto, and we do this through LinkedIn. So here's what I want you to do. I want to give you $50 right now, a fitty from Jason, linkedin.com/angel. Go to linkedin.com/angel, and you will get $50 off your first job post, linkedin.com/angel. It works. It's amazing. I'm telling you this because I want you to find great talent, and because I did. Okay, let's get back to this amazing episode. Hey, everybody. Welcome back to Angel, the podcast hosted by Jason Calacanis. This is my NPR public radio voice. But I'm not going to use it for the rest of the podcast because it's super annoying and pretentious. What's not pretentious is your work ethic, Charles. Doing all these investments in the earliest stage companies. I admire that as an early stage investor, having the chutzpah and the wherewithal to make decisions when there is very little to go on. Mm-hmm. Which leads to the question, when there's very little to go on, what does Charles Hudson go on?
It's something we spend a lot of time thinking about internally at Precursor now that we're a team of 3. I spend most of my time, it's interesting, we probably in a normal year will talk to 2,000 to 3,000 teams.
Wow.
Yeah, it's a lot of fun. It turns
1,000 each.
1,000 each. It turns out
20 a week.
When the bar is no traction, you meet a lot of people.
Yeah.
And what I've noticed is the thing that jumps out at me is really founders that have a unique insight on the market that they're going after. I wouldn't describe myself as a deep evaluator of product, and many of the companies we invest in are pre-product. What I'm looking for is people who have really interesting, or I'd say unexpected insights on the market that they're going after. And I think this unique, we oftentimes say internally, they have to be both unique and durable. So durable in the sense that these companies are oftentimes 6 to 12 months away from shipping a product. So if the insight you have is fleeting by the time that you ship the product, that insight might no longer be terribly insightful.
Right.
So we're really focused, and most times it ends up being something to do with the business model or the strategy of the incumbent firm. So just one really tangible example, we were really early investors in a company called The Athletic that does subscription media for the consumer. And Alex and Adam had this really interesting insight that, hey, there's a lot of free Bleacher Report style sports content out there. And then there's ESPN. And we think that sports fans would pay for really high quality, dedicated journalism, starting with print and moving into audio and video later.
Yeah.
And that was turned out to be a controversial set of assumptions. A lot of people said consumer won't pay.
Yeah.
Sports isn't a big enough vertical.
This is like what, 3, 4, 5 years ago?
This was 2015 or 2016. Yeah.
Yeah. So 5 years ago, 4 or 5 years ago, the idea that consumers would take out their wallets for content was like, what?
It just flew in the face of what most people thought would work. But the team who started the company, they both worked at Strava on the company's freemium conversion. And I think they just had a good intuition about what consumers would and wouldn't pay for.
Yeah.
And that's the kind of insight we're looking for. Someone who's looked at a market and has a thesis and an idea that would be hard for the incumbent to copy and either takes advantage of a business model innovation or a consumer behavior change. Those are the things we get really excited about.
And when you did Postmates and Superhuman and Style Seat, I'm in 2 of those 3. I was almost in Postmates. Literally, I got screwed out of it. I always tell the story on the podcast. He said the founder sent me like the term sheet. I signed it. I sent it back for $100,000. Yeah. And then I didn't hear anything back from him. It went dark. And then I was like, hey, I sent that thing in. And where do I send the money? And he's like, oh, we couldn't fit you in this round.
Ouch.
It's the only time that's ever happened. What's that kid's name? Who's
Bastian?
Bastian. Yeah. He's like, I'll make it up to you. He never made it up to me.
I wish I could say I've never been squeezed out of a round.
This is the first and only time Jason Callaghan has been squeezed out of a round. It was early in my investment career. Mm-hmm. But that was a painful one because they're going to go public. They filed their
I think so.
I think they filed. Yeah.
I think they filed.
Take me through any of those 3
and
what you saw in them and how it's gone since.
Yeah, so my partner Jeff has been the driver on a Postmates investment. I'll pick Superhuman because that's one where I think I've been most involved. It's interesting. A few years ago, a good friend of mine and I were geeking out about email productivity hacks. And a friend of ours overheard the conversation and said, you guys should write all this stuff down. It's kind of ridiculous how much time you all spend thinking about email productivity. So we wrote it all down and we made a free ebook and gave it to a bunch of people.
An ebook.
Mm-hmm.
On what was it called? 10 tips for being better at email?
No, it has a flashier name than that. But it's about mastering your inbox, and it's just
mastering your inbox.
It's a bunch of like lessons and techniques.
You truly are a geek. Wow,
I'm a nerd.
That is the nerdiest. I'm trying to think of a nerdier, like how to organize your Pokemon Go collection. That's the only one nerdier than how to be superhuman. But anyway,
that might
continue.
have us beat. And the irony is, like, my co-author in this book called me one day and said, I met this guy, Rahul, who I think you know from when he was doing his last company. You really have to meet him. He's building a product to do all the stuff that we wrote about. And that was literally the prompt. And I went and met Rahul, and he was in this terrible loft, not too far from here. I mean, it was a terrible loft off of Brannan, had no air conditioning.
Yeah, that's around the corner from here.
8 people packed in. I was like, this is no way to work. And he showed me the product, the first version. I go, oh, I want this. He goes, well, you can't have it. We're not ready to share it with anybody else yet. Oh. Let me tell you about our vision for making the world's best email client. And I just really believed in Rahul and Vivek and the early team there. And I would have never guessed that the product they've built now would be so awesome and amazing for not just for me, but for me and thousands of other people who use it every day. And they've really done a great job, and they've really stayed true to what they said they were going to do.
Their insight was very clear. I was an investor in Rahul's first company, Reportive. And when he told me about Superhuman, it was very clear. He wanted to take on Gmail, and his strategy was to get people to pay and to make it faster. And so I said to him, Rahul, you want to take on a free product from the largest internet company in the world with the most servers and the greatest engineers, the deepest bench. And your thesis is that the way you will beat the largest computer footprint network ever created by humanity and the largest number of engineers ever assembled to work on a project together on a global basis is to take what they give away for free and charge $300 a year for it. And he said, yes. And I said, I'm in. Those are my kind of odds. That seemed obvious to me. that a big clunky company like that would never be as nimble and would never have the laser-like focus to say, we'll just stay true to the mission of making you super space human. And they really have delivered. Did you get the iPad Pro version? You're
I've
an
been
iPad Pro
bothering
user?
about that. I've been bothering about that for so long. So
Since
it
the
was like
beginning.
super happy day when I got the iPad Pro version.
See, what people don't realize is if you're a VC, you use an iPad Pro because it's the most expensive and silly computing device out there. So, of course, VCs use it.
It is a total luxury device. It is not a laptop replacement at all.
No, it's
At
literally
all.
a device for people who want to take notes with the stylus, as if what they're writing with their stylus is important, like their Picasso. But boy, it just came out, the iPad, last week, and it is buttery.
It's amazing.
It is buttery.
He had one other insight that he sort of said offhand that I thought was important too. I talked to Rahul. He said, look, the problem with every other email client that's free is eventually the cost of storing other people's mail becomes prohibitive. And you can't play the long game in this business if you're going to spend a ton of money storing lots of email for free users. So he's like, the paid strategy, in addition to allowing us to invest in features, it's about our sustainability and ability to kind of persist. And like, this is an important thing. I was like, oh, that's actually a really fundamental insight about this category that no one else seems to be making.
Yeah, it is interesting. Founders, I guess, because of the history that they see of Silicon Valley, and obviously history a lot of times is written by the victors and is written about the things that are not the norm, but they are presented sometimes as normal. And one of the things that people consider normal is companies not making money for a decade or 5 years or losing money forever. That's not what typically happens. That might have happened with Uber and Lyft or Postmates. In this environment, it might have happened with Instagram, who pushed off advertising for a long period of time, or Google, who took their time. That's not normally how it works. Normally, people know exactly how they're going to make money, and they have it online immediately? Does it matter to you?
It's interesting. We were going back and looking at our consumer portfolio in particular. Most of our consumer investments are either marketplaces where we understand the transactional model is going to work very early and easy, subscription services where you can test really early whether people will pay. And we tend not to do a ton of investments where we're going to build this very, very large audience and then we'll figure it out. I think, because my basic view is at some point your business model and your product strategy have to be in sync. And it's really hard to do that if you punt on the business model till the very, very end.
Yeah, that seems very unwise to not have a model when you're coming in to talk to VCs and putting it off. Because your North Star, the thing that's guiding you and your company and your team and everything just gets wacky. You start servicing like some Google Analytics or SEO or some false god when the real god is like your customer.
That's right.
How do you think about markets and which markets to invest in? There's a lot of people out there. You seem to like the idea and you seem to like the founder. How do you think about markets? Some people are just market-driven investors. We've met them before. Is that a valid way to invest, do you think?
I think so. What I tell most of the people that come into our office is 75% of our decision is about the founders, 25% is about the market.
Got it.
So we will not make a founder-only bet on a market that I think is terrible.
Terrible.
So the market bar for us is I have to be neutral to positive on the market.
Gotcha.
I don't have to love it,
Right.
but I have to not hate it. Because what I've learned is really great people, if you have Series A money and you're in the wrong market, you might actually have the funds and time to pivot and find something new. The pre-seed rounds we do, they're $1 million. They're designed to last you a year. If you pick a bad market or a market that's not amenable to your strategy, you probably will not have the time or money to pivot and pick a new one, which is not to say we don't have companies in our portfolio. We have a company, Casa, that's in the crypto space that started out doing private home sharing, so a private mini version of Airbnb, and they pivoted into this sort of multi-signature distributed crypto key management system. But that was driven more by the founder's recognition that his original idea didn't work and his passion for crypto than anything else. And so what we look for in markets are, does the founder understand the structure of his or her market? Do they understand how it works today? Is there some fundamental shift happening in the market? Like we've done quite a bit in paid consumer services just because I'm of the mind that people are paying for Netflix, Hulu, Spotify,
Yes.
Apple Music. They're paying
Yes.
for more digital services.
Yes.
So things that people wouldn't have paid for before are now interesting, but you still have to build a really good product. And the nice thing about getting money from customers is there's this virtuous loop we talk about is when your customers pay you money, it gives you more money to invest in giving them high quality content experiences, which then attracts more paying customers, which gives you more money to
The
continue to invest.
flywheel goes.
The flywheel goes.
Yeah.
And so I'm very focused on markets where I think the founder understands the structure of the market. I don't know about you, Jason. I have a lot of people who come in and tell me this market's huge. Like if someone said search is a huge market. I'm like, yeah, and Google has 95% of it.
Yeah.
And DuckDuckGo has the rest. It's big, but it's not contestable unless you're doing something really different. So we try to really make sure that the founders understand that for us, market structure is as important as market size.
That's so interesting. Market structure is important to market size. It's also interesting your thoughts on the amount of runway you have to have a pivot. It's almost like these seed rounds are like enough fuel to get you there. But if you decide on the way to Hawaii that you want to go to Fiji or Alaska, I'm probably not going to be able to make that decision. You may need to have a plan to land the plane and get into the life raft and hope you float to a destination. All right, when we get back from this quick break, I want to know how you make a decision if you're going to, when a founder is on the phone, maybe they're crying, maybe they're upset, and they say, you just give me a bridge for 3 months, just 6 months. I'm about to figure it out. How does Charles Hudson either give them that lifeline or watch them drowned when we get back on Angel, the podcast? I want to tell you something important right now. I know you've got a high growth startup. I know that you're getting things dialed in right now. Things are going great. But what if something goes wrong? What if you get sued? What if you get hacked? Well, you need cyber insurance for that. What if your company gets sued and then they want to sue the directors, your board members, your investors? That's what D&O insurance is for, directors and officers. That's why when you get an investment, you get a term sheet, it says, hey, you better make sure you have that D&O set up. That's why in your first board meeting, the directors and the officers of the company say, hey, where's the D&O? They want to see that because they've been through it before. Maybe you haven't. Maybe you're a first-time founder. Well, here's how you solve those problems. Errors and omissions insurance, E&O they call that, D&O, directors and officers insurance, and cyber. Here's how you get those dialed in. You go to Embroker.com/angel, EMBROKER.com, Embroker.com/angel, and you will get 20% off on your premiums, and they'll do it in minutes, not days and weeks and months like other insurance companies. You're going to save so much time and so much money, and you're going to be covered, which is really important. You don't want to deal with getting sued and not having insurance. It could be the death knell of your company. You could literally lose everything. I am not being hyperbolic here. I have been involved in many startups, and when you get sued, it is a disaster. Unless you have insurance, and then you know what happens? You sleep well at night. And you go, oh, we're insured. Just like, you have your car and you get a dent in it. Or even if your car got totaled, somebody rammed into it in the street. If it's insured, you're like, okay, I'm insured. Nobody got hurt. Great. That's not the case when you get sued as a company. It can kill your company. There is no excuse for your high growth company to not have the insurance dialed in. And there's no excuse for you to be wasting time with traditional brokers who are going to waste your time. Get the white glove service that Embroker.com/angel gives you. Okay, let's get back to this great episode. Welcome back to Angel. You can find this podcast by searching for Angel on your podcast player of choice, and you will find 50 podcasts about angels from religious people. And somewhere in those 50 will be this podcast. If you search, you will find it. But I'm sorry if you find a podcast about the Archangel Michael and angels roaming amongst us. There's a lot of weird people out there, and 1,000 flowers have bloomed in podcasting. That's a weird moment when I search for Angel. I'm like, where's my podcast? I found all these like wacky ladies from like middle America doing podcasts. And like, it's like Edith and, some other like old lady name. And they're just like, oh, and this angel visited me. And I'm like, what? Okay. Go to Angel Podcast and you won't have this problem. Angelpodcast.com. My guest today, Charles Hudson, managing partner of Precursor. 50 investments, 15 exits. Lots of them, Postmates, Superhuman Style Seat. And he used to work with our friend Jeff Clavier over at Uncorked. So when we left our hero, that's you, Charles, we had this really dramatic tee up here. The question is obvious. And you get it, I think, all the time.
We do.
A founder cannot clear a market. They've taken 20 introductions from you and the other investors, and they come back empty-handed. They are burning $50K a month. They believe they need 3 more months, $150K, and they can make it to Hawaii in this crazy metaphor. Just give me that 3 extra gallons of fuel. I'll make it. They're not going to make it. How do you have that discussion? How do you make those decisions to give the bridge or to not give the bridge?
It's one of the more difficult things we do at Precursor is trying to help. So the way I think about it is my goal is to help the founder get to the zone of realism and figure out what I think is likely to happen. So you said 20 introductions. I would say oftentimes by the time they come back for the bridge, it's more like 40.
Oof.
They've really exhausted the market.
Yeah.
And I won't pretend that this is a coldly rational process. It ends up being emotional for me too, because we've built relationships with these founders and I feel connected to them. I think for me, the big question is always, what did we learn from talking to 30 or 40 investors? And so I always ask myself a couple questions. Has the company been responsible with cash to date? Have they kept the burn reasonable given where they are? Were they ahead of this problem? Or did they come to me and say, hey, we have 2 weeks of cash left. We shouldn't have gotten into this place, but here we are.
Right.
Help. That's not a success criteria, in case people are wondering. Sometimes I just say, hey, I believe in the business. It could be that they're in a sector that's just deeply out of favor. It could be that they're a founder who I think, in terms of just innate or practice fundraising skills, still isn't at the level where people are going to say yes.
They're not sharp.
But not sharp.
Yeah.
So I would say, and also I just have to be honest, I'm a default optimist. So my general, my LPs are probably going to cringe when they hear this, but I'm a default optimist. And my view is that, the people we back them for a good reason, and we back them because we think they can figure it out. And we want to support people where we can. The times we say no, sometimes people will tell me, hey, I need 750 to get to the next milestone. I'm like, I agree with you. Me giving you 250 gets you a third of the way there. That is not, there's no reason for me to give you $1. Let's go see if we can find, and oftentimes what happens, company goes out, they want to raise a $2 million seed round. It doesn't materialize. They go, okay, the feedback we got from the market is that we need a little more traction. So maybe if we did 750 now, in 6 months, we could go back out. And I just try to be honest with founders. Sometimes I tell them like, hey, the market might never like your business. We have a couple of companies that are in vertical markets where investors just say, I don't understand that market. I don't understand your customer. It's not interesting to me. If I think the business is good and they can get to cash flow break even, it's actually a really easy conversation.
Yeah.
I'll tell them, all right, if you can get the cash flow break even on 500, let's raise 750, but I'm taking you at your word that you're going to get the company to cash flow break even no matter what it takes. Sometimes the company is 30 introductions in, we're on a bunch of third meetings, but no term sheet. And we're not sure one's going to materialize, but having a little more gas in the tank would give the founder the confidence to sort of keep going.
Wow.
And I think of that as more like we're advancing a round that I think will likely happen. And sometimes we do it just because I simply believe in the person and think they're going to figure it out. And 2 of our best companies were at that point where they were almost out of cash. They'd done everything right. Everything just hadn't come together. And they said, we really believe we're on the cusp. But the data showed they were on the cusp. Things were starting to work.
There was evidence.
It was evidence.
Yeah, see, I think that's a very interesting approach because everybody in this town, I'm talking about the Silicon Valley, finds it very easy to throw money into an oversubscribed round. But to lead, to be a leader, to be the first person to put money in, like you and I do often, or to give that bridge and say, you know what? I believe you. I believe myself. I've looked at the data. I've heard your story. I talked to the customers. Yeah, I think it's reasonable we can get to break even on 500. Let's do it. There are some firms that just have a no bridge policy. Or, what I've done in some situations is I said, well, how many people did the seed round? And they say, well, we had 8. I say, great. If you get all 8 investors to do their pro rata in reverse, like 10% of what we all put in. So if you raised $1.5 million, if you can get everybody to put in 150, I'll do it. Or I'll even do double if you get everybody. And in like 1 or 2 instances, I challenged the founders with this. I said, let's get some consensus amongst all of the existing investors. I don't want to be the only one just because I happen to have the best checkbook or the biggest right now, depending on the situation. Like, let's get everybody in. In both cases, I think they got to like, let's say there were 8. In one case, they got to 7 out of 8. And the one person was like, I'm broke. I have kids. I can't do any more angel investing. And I was like, okay, fine. And the other one, they got 8 of 8, if whatever the number was. And it worked pretty well because at least we had a group of people rallying to support it. But boy, founders, sometimes I find, I don't know if you find this, they kind of hold on longer than they should.
This is something we struggle with still to figure out how to do. I don't think it's my place to tell people to quit. But I have in cases told founders, you've done everything I could ask you to do with this business. At this point, you don't owe me anything. You've given it your all. I'm not telling you should stop working. I'm telling you if any of your feeling that you need to keep going with this is driven by a desire to generate a return for investors, I think you've given it your all. Maybe you're in a space like virtual reality that's really out of favor right now.
Yeah.
And where it's just difficult, no matter how hard you work or what you do to get investors' attention. And I find sometimes as an investor, it's just, I feel better if I let the founder know, I'm here to support you until the very end, but like your time is valuable too.
Yeah.
And I'd hate to see you continue to persist on something that you don't believe in. If you believe in it, then like by all means, let's keep going. But this whole bridge thing, I think it's a hard conversation. I understand why some firms have this no bridge policy. It's just sort of like taking away the punch bowl. That way nobody can do it and you're consistent. The only ones that make me really nervous is when I ask the founders, what are we going to do differently with this next 500K? And they're like, the same thing, just longer.
And you're like,
and I'm like, well, this isn't working. Like the market just told us the thing we're doing isn't working. So this bridge has to cause us to do something different.
Yeah.
And different can be more focus on getting paying customers, more focus on proving out the business model, more focus on tamping down what we spend on acquisition. It could be any number of things.
Yeah.
But if the answer is we just need more runway to keep going, to keep doing the same thing, I'm like, you're not hearing what the market's telling us about the business.
This is the person who's flying to the Arctic. And it's like, by the way, this plane cannot hold enough fuel in this metaphor to get there. This plane is not certified to go there. It's only got a 500-mile range. You can fly this one to Sacramento and pack. That's it. It's not designed for this. Just stop. So how do you think about then pro rata? Because now we've gotten through how do you deal with the shutdown? It's pretty, I think, good advice. I like the fact that you give them permission to close up shop. I do that as well. I tell them, listen, if you close down properly, so everybody can take the loss and there's not like this paperwork hanging out there because people like to take the loss as investors. Close it down properly and just be an adult about it. All I ask is you tell me when you're going to start your next company. And in fact, the Superhuman discussion was because I told Raul, you can sell to LinkedIn for $15 million or whatever it was some very small amount. And we tripled our money. And I was like, yeah, it's great to make $75K, but I just want to know what your next company is. Can I be the first person in the next company? And he guaranteed me I would be. And then he didn't do it. I was the second investor, but I was still in the first round. He's like, well, I know I told you the first, but this other investor, they just threw $1 million at me. I took it. How do you think about following on in pro rata? How do you make your decision of, hey, it's going to cost me $1 million to keep myself at 10% as opposed to, I'm going to go down to 9%. No big deal.
We have a small fund. So our first fund was 15. Second fund was 30. We have some very supportive limited partners in our fund who will co-invest alongside us in SPVs for some of our larger deals. My basic philosophy is I want to follow on with companies if I'm happy with the progress and we have reserves. The only tension in our model is our initial entry point for our pre-seed companies is generally sub 5. And so I'm always weighing at the seed, it's kind of an easy decision because I'm like, okay, it's maybe we're paying a 2 to 3x increase in price to get into this round, but the company is pretty substantially de-risked in quotes relative to where it was when we found it. And it's not going to mess up our cost basis. It's a Series A that's harder because oftentimes those are 4 or 5 on a just sort of not factoring in dilution and everything, 4 or 5 times the price we paid at pre-seed. And now I'm like, okay, should we take 20% dilution and sit on that check and deploy it to another really low entry point company? Or should we buy more and average up our cost basis?
Yeah. There's a lot of math to do there. These SPVs, these little special purpose vehicles you do those with AngelList, or you just do them on your own with your attorneys just to pop them up?
We do some of them on AngelList. And we have a third-party software platform that we like that we also use for some of them. Mm-hmm.
What's that, Assure? Or
It's called Flow.
Flow, really?
It's really awesome.
You can just pop up an SPV and have people join it?
Mm-hmm. And we mostly, the ones on AngelList, we have our LPs plus sort of a wider network of people that we like.
Yeah.
The ones we do off AngelList are just for our LPs.
Got it. Like nobody else is getting invited into this.
And those tend to be just larger SPVs where I know that it's effectively a way for me to help some of my larger LPs do direct deals in some of our best companies.
Yeah. Hey, Silicon Valley's gotten a real black eye over the last couple of years. People hate us now. It wasn't always like this. Does Silicon Valley deserve this reputation? Why are we in the crosshairs, do you think? And what do you think we can learn from all this chaos?
I think the thing that we forgot when software eats the world is that software touches everything, and you start touching areas of the world and areas of business that touch on things like labor and human rights and democracy and financial inclusion and all of these things that were thought of, I think, traditionally as purely social problems. Technology is now part of the discussion. And I think for a long time, there was a view that technology was mostly a force for good. Yeah. And that the things that technology touched got better, not worse. They got cheaper,
by
better
default.
for the consumer. By default.
We thought that.
Mm-hmm.
How naive were we?
And I think what we've seen is some of the things that we've created as an industry, like Facebook, Twitter, Jewel, a handful of products have like maybe been used in ways that their creators did not intend or anticipate. Yeah. And there's social implications for that. And I think saying to people, I didn't intend for the thing that I created to get used in this way, is kind of cold comfort when people say, but it's being used in this way. You have some responsibility for your creation. Yeah. And I think as an industry, because technology has largely avoided, for the most part, regulatory glare and has been seen as like a positive force, we've never had to reckon with what I would describe as criticism. Some of that criticism comes from people who say, hey, your technology, your cool algorithm for finding the best engineers is excluding people who look like me. This is not a technology problem. This is affecting my life. I can't get a job.
Yeah, it's not the search rankings.
That's right.
Now we're ranking humans. Mm-hmm. We're not making video games. We're using the video game technology to make self-driving cars. And people can die in them. Mm-hmm. And will die in them because they're abusing it. I mean, I just watching these YouTube videos of people with their Teslas, and I'm just like, this is why we can't have nice things. Like somebody was like, this is Tesla's fault. And I just said, here's a video of somebody standing on top of their motorcycle on a freeway and falling off. Is this Yamaha's problem? Or is this the dipshit who decided to stand on a motorcycle and risk not only his own life, but the other people who are going to swerve out of the way and flip their freaking cars over? Like, there was this video from China of like somebody in the backseat of their Tesla sleeping while the car was in self-driving mode. And I'm like, are you guys out of your mind? It's called autopilot. The thing turns off if you don't put your hand on the steering wheel. Then they show the steering wheel. He put a clamp on it, Charles, with a cup holder. So he just put a bottle of soda unopened. He wasn't drinking it. He used the cup holder to counterbalance it as a weight to trick the system into thinking somebody's holding it. I'm like, okay, well, this is somebody putting a cinder block on the accelerator and you're blaming the Volvo for running off the cliff. Like, people are dumb. But in the case of Facebook, certainly they could have seen this coming. I mean, they just ignored it and they went fast and they said, let's move fast and break things. I just think they didn't think democracy would be the thing they broke, huh?
Well said.
Yeah.
And I just think...
Well, I built off what you said, which is like, you're like, it touches democracy. It's like, yeah, there it is.
I think culturally, most of the technology companies are kind of thin-skinned. And
They
I think
are.
it's because they're not used to the criticism, and it feels unfair because
Boo-hoo.
being told the thing that you built isn't this beautiful, magical, unambiguously
Unicorn.
good thing is a hard thing to hear when you think, but that's not what I intended.
Yeah. It's like, I didn't intend that, but I did take the money in rubles and I did let them target people based on their race and if they voted for Obama in a swing state. And I did let, I don't know, Peter Thiel or this Steve Bannon's, company pull that data and then try to get African Americans who came out for Obama to not come out for Hillary. I mean, it's some dark, crazy stuff. And then Peter Thiel feels no problem coming out and giving like the pre-speech for Trump at the National Convention. And where's Cheryl and Mark coming out for who they believe in, Hillary? Not a word, not a peep. And you know that they're both hosting fundraisers and donating to Hillary, but they felt like they didn't want to lose half the audience by being pro, but Peter has no problem in being pro. It's like, wait a second. That was the confusing thing to me.
I think there's a lot of confusing things when people who've been very happy operating in the background no longer have that option. And I think what it is, I think there's just, it's interesting. I have a bunch of friends who are in media and PR and comms. And when I talk to them about this stuff, they're just like, hey, most other public companies are used to scrutiny. So the executives at that company are used to hostile audiences. They're used to people being suspicious of their motives.
Right.
Tech generally isn't. And I think what we're seeing is the industry's growing up and is recognizing that we're not going to get the benefit of the doubt every time.
Yeah.
That for some of these companies, their labor practices, their hiring practices, their promotion practices, the impacts of their products on society, on the environment, they're going to be scrutinized. And so I think tech is too big now to fly under the radar. It's everywhere and it's too big. And I think this is a really important thing for our industry to accept that, like, we have to think more broadly about the impacts of the products that we build or don't build. And when they're released on the internet, they're not going to just stay on the internet. They're going to bleed into the real world.
You think it through. Like when I saw those kids with the secret, and it was like, I don't know if you remember the app secret.
Yep,
You weren't an investor in that, right?
I was not.
I saw that and I was like, oh, they take your address book from your phone. They see that we have 20 people in common. They make a circle out of the people we have in common. And then we can slander each other anonymously. It's like, really? That's the purpose of this? Oh, it's growing fast? Really? So is graffiti on the inside of toilets at college campus where people are writing, Jason is a slut and Charles is a pig and blah, 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 blah. It's like, what are we doing here? Like, this is what you've chosen to build in the world? Is a secret app where people release each other's secrets to inflict pain on each other? And then, by the way, I don't know if it's Redpoint or somebody gives them $20 million and gives $5 million in secondary to the founders to go buy Ferraris, which they did, literally. It's crazy. I get into this a lot because as an Uber investor, are you in Lyft or Uber? You're in
Neither.
Postmates.
No, I'm in neither.
You
Yeah.
probably get a little bit with Postmates. Is this a sustainable living wage? And it's really like insane because I have these people who are completely intellectually dishonest on Twitter. And they're like, look, this driver made $1 an hour. And I'm like, okay, why would they continue doing that when there's a million other jobs out there? We're in the lowest thing. And they're like, nope, they made $1. I'm like, it's got to be a mistake. Like, what are you talking about? They're like, oh, okay, this person asked for a refund and the driver, had to refund the money, whatever. But then they're also like, oh, a driver chose to work Saturday or whatever, Tuesday overnight. And they got 2 calls and they were for $20 each. They made $40. So in 8 hours, they made $40. It's like they were sitting around reading a book or sleeping during the other time. This is a per job service. So do you really think it doesn't net out to above minimum wage? You're crazy. Of course it does. Because there's $15 an hour jobs at Target or Walmart or Amazon. Why would people choose to do a $1 an hour job? It's bonkers. So some of it is like this poor communication ability of companies. It's weird. Do you think it's getting better? Do you think the industry is more just? I mean, I hate to ask you as like a black VC in the industry, like, hey, as a black VC, what do you think about like diversity? But what do you think about diversity?
I'd rather you ask it. I mean, I think lots of other people think it and don't ask it. So I'm glad you asked it.
Listen, I'm from Brooklyn and like, it's very weird for me to be live in a world now as a Gen Xer. We're both Gen Xers. Like, I grew up like everybody talked to each other about these issues.
Mm-hmm.
And where did you grow up?
Michigan.
Michigan. Yeah. So like we all just dealt with each other in New York, whether it was Chinese, Black, Hispanic, white, Irish, Italian. And the Irish and Italians did not get along very well, I'll tell you that. But watching it in our industry, it seems to me just 10 years ago, I would see very few female founders. Now I see a ton. Very few Hispanic founders. Now I'm seeing some. Black founders, yes. Black female founders, not so many. But it does feel like every year that goes by, it gets more diverse and more people feel like they're included. How does it feel to you, having been in this for 20 years now?
I think the rate of progress that's been made on gender in the last 5 years, if you told me that was possible, I would have laughed at you. I would have said, there's no way you can go from default, every VC firm has no female general partners, to
like
a world
zero, literally zero.
To a world where it's kind of anomalous. If you look at a venture firm's website and it's all male, you're sort of like,
really?
That's weird.
Is it a 2-person firm and you guys were twins or roommates together? Like it would be very odd to see.
It'd be very odd to see, especially with a relatively modern firm. I think the number of female founded companies of scale, I look at like Jennifer Tejada from PagerDuty is one of the most impressive executives I've ever met in my entire life, like period.
Rent the Runway,
Katrina Lake. Like there's just a bunch of companies, and it feels like it wasn't like Silicon Valley didn't know that gender discrimination and like the lack of access to capital and jobs for women was an issue. It's like all of the sudden, in quotes, it got better. And I think it got better because the female GPs and founders I know organized themselves.
Yeah.
And stuck together and made common cause. And I think if you just look at college graduation rates, there's just a lot of really talented women graduating from university or spinning out of big companies. So the good news is there was enough pent-up demand for female talent that once people got over their biases, there was plenty to choose from. I'm really disappointed in our progress on race, particularly intersectional issues around race and gender. And I really think for all of the things we talk about in Silicon Valley, I don't think we talk enough about how much of a company town this is, and that it's one thing to diversify your workforce. It's a different thing, as I tell people, to diversify your weekend. And what I've noticed is like there's just a lot of people who end up making socially influenced decisions that are not per se racial.
Right.
This person's kids go to my preschool and I funded him because I met him at pickup, or our kids are on the same soccer team, or we live on the same block.
Yeah.
And if you look at old Silicon Valley, it's much more of a Woodside, Atherton, Menlo, but those are just not diverse cities at all.
No.
So if that's your primary social interaction, you are very unlikely to meet people who are different. Maybe you went to the GSB and your neighbor went to Harvard. Like that's about as diverse as your neighborhood's going to be.
A Harvard person, what a rarity.
And I think the issue, particularly for Latina and Black female founders, is the odds of me going into a room and seeing somebody who looks like me is pretty low. But the odds of me going to a room and meeting another guy where we have like that in common, pretty high.
Yeah.
Pretty high.
100%. You're going to meet another guy who can bro out with you.
That's right.
Let's bro out.
And I think if you're a white woman, the odds of you meeting another white woman in tech or in venture at this point is not zero.
It's 20%.
20%?
Yeah. 30%. Yeah.
But I think the other thing is that the person across the table from you likely knows somebody who looks like you, can relate to your life experience. You're not going to feel foreign or alien or risky based on the way that you look. And I've met quite a few people in tech who really don't have meaningful exposure to people of color socially. So they don't have like friends who are Black or Latinx. And so it ends up feeling, and we talked about this before, like how do you make decisions in a world where you're sort of like, I'm searching for some anchor to make myself feel more comfortable. And I tell everyone, look, I went to Stanford twice and I'm Black. So I feel like I see it from both sides. I see the times that Stanford opens doors for me that maybe wouldn't open as easily. And
of course. Going to Stanford is a big deal. I went to Fordham at night, man. You got the edge on me in that one.
This worked out pretty well for you, Jason. Let's be clear.
I was an outsider.
It's worked out pretty well for
the
you.
Anti-example. It's like kid from Brooklyn becomes the first Sequoia Scout. How do we reconcile this? No Stanford, no computer science degree.
And here you are.
And here we are. But,
So I'm like really, I guess I'm kind of skeptical that the progress we've made with women will be replicated with race until I think there are more people in the funding community who look like me. Yeah. I just think that's the fact. I tell people all the time, if you really want to change the racial composition of startups, you should really give money to people who are embedded in those communities because they're going to find the stars.
Of course. We did Founder University. I think you've participated a couple times now. And we were like, you know what? We're back to the pipeline. I don't mean to use triggering words for people listening at home, but if you're a VC and you're getting emails in, there is a pipeline issue. You may only see 1 out of 100 people emailing you is a female, Black or Latinx or, founder. And then, we did? We did Founder University at 3 of the 6 times a year for females only or for underrepresented founders. And we found everybody all of a sudden. And I was like, wait a second. Why are they? It's like there is something to either people don't feel comfortable emailing me as like some white guy VC my stuff because they don't think I'm going to take them seriously. But when we say we're having this and it's just for underrepresented groups, then all of a sudden we have 60 people in the room and it's totally changed our deal flow. The number of female founders through the roof, number of Latin, African-American founders, not as much as I'd like to see.
And I'll tell you, everyone who works at Precursor full-time is African-American. There's 3 of us, but we have 2 Black females and they see things I don't see.
Any chance a white guy can get an associate job here at Precursor?
We had a white guy who was an entrepreneur in residence.
Fired him. So. This guy's way too entitled and lazy. Get the heck out of here.
But the fact that our 2 female team members find Black female founders that I wouldn't find tells me that gender matters. And tells me that they're moving in circles and meeting people. They're both younger than I am too. Like they're moving in worlds where I'm not present, and their presence brings something extra to our fund and brings companies that we wouldn't otherwise see. Even though there's not that you would think, there's not that many Black VCs. Every Black founder emails every Black VC. That doesn't even happen.
Really? See, I thought was very interesting was watching. A lot of the NBA players have gotten into angel investing and venture now, and they have much higher net worths than you and I. Kevin Durant and Carmelo both started doing venture. Draymond's getting into it. I'm friends with Draymond. Bogut, Andrew
Steph's got some stuff going on.
Steph's got some stuff going on. Just across the NBA, they're all like
Roger
really,
Mason
and
Jr.,
then what's that?
Roger Mason Jr. There's a bunch of the NBA
Roger
guys.
Mason Jr.
Yep.
Oh yeah, he was a Nick.
Yep.
A lot of them are a lot. And then I got a DM from Delhi, Delavadova, and he's like, "I read your book." I was like, "Oh my God, I'm a huge fan of yours, except when you were destroying the Warriors with your insane Tasmanian devil stuff." That to me seemed like a really good turning point because there is so much money and wealth and power in celebrity. In culture when it comes to African Americans that I think once that gets tipped over, oh my God, like Jay-Z can do his own fund. Like Jay-Z doesn't need to get LPs. Like Jay-Z is the LP, right? Beyonce's an LP. She gets $100 million for showing up somewhere. Like they go on tour. What do they make? $100 million in a tour? Like that to me is where things can really start to, I think, flip and go in a positive direction. Because when I was growing up in New York, it was very interesting. Like I was a journalist and the hip hop community was entrepreneurship. Like I had started my own magazine. I used to hang out with David Mays from The Source. I don't know if you know David, but, and we used to play basketball with DJ Clue and Diddy, Queen Latifah.
Wow.
This is in New York in the 90s. It was crazy. But the hip hop community in the 90s in New York, they were 5 steps ahead. They were like, we're going to do jeans and clothes, FUBU. We're going to do magazines. We're going to do alcohol. We're going to do everything, clubs, whatever it is. And I think that them coming into that, the hip hop community coming into venture and the sports community coming into venture could be just like the most powerful thing. Because what happens if Kevin Durant tweets about your startup or Beyonce wears your wearable? She was wearing like an Apple Watch at the Coachella last year. Like that could drive massive sales.
And I think it's interesting, when I took a trip to a country that has an emerging tech scene, and I talked to people there, and I said, what's the hardest problem raising money? They said, well, we're a primarily agricultural economy, and there aren't that many people who've made money in tech. And so we have all of this wealth, but all of it comes from ag and real estate. And so those people feel very qualified to invest in categories that they know. Yeah. And I think we're at the early stages of what you've described, because I think there hasn't been a lot of black wealth created through tech.
Not yet.
Not yet. It's coming, but
it's
not
definitely
yet.
coming with Kevin Durant and some of his investments, and Melo, and some of those investments could wind up trumping their NBA careers.
And I think that's going to change things when these folks say, like, hey, I made a lot of money in tech. Like, investing in tech was a good financial decision for me.
Yeah. I was listening. I don't know if you've been following the reparations talk and from Georgetown and some of those other places. And I was just thinking about this, and I was like, wow, when I was a kid, like when I was in college, I was like, whatever, reparations, like this happened 200 years ago. Now I'm like 48, and I'm just like, we have such a horrible legacy in this country when you look at the violence of cops and stuff like that. And it's so obvious that this is like systematic. Like, wouldn't it be like an incredible gesture and probably would have great efficacy if we said, yeah, we're going to do reparations, and here's the form it's going to take. I'm actually like super pro this, because living in an uncomfortable society where you feel like if you and I are driving our Teslas, like, and you get pulled over doing 92, it's one experience, and I get pulled over doing 92, it's a different experience. That to me seems so fucked up.
I think the real problem is America has a hard time talking about structural racism.
That's why I want to talk to you about it.
We have a really easy time talking about individual people doing racist,
crazy
things. We can't even say racist. It's racially charged, racially motivated, because I can't think in our society of many things that are worse to be called than a racist. It's pretty, like, it's
means you judge people on their skin color or where they're from. It's like the worst thing you could ever do as a human, to me.
It's true. And I think as a society, if it's hard to talk about structural racism, where like, hey, there are like systems and policies and procedures and things like redlining that were like laws that were put in place to reinforce. It's very hard for the person who thinks of racism primarily as like a white person saying something mean to a black person to have the bigger conversation around structure. And I think in our current political environment, it would be very difficult to pull off something that tries to, whether it's that tries to make amends. Like, I don't know, one of the most powerful things I've done in my whole life is I spent a couple of days in Munich on a consulting project. And I said, I really want to go to Dachau. And like, I just want to like go experience it. And like, I was like quiet for the whole rest of the day when I came back. And I was like, this is a place that has a profound recognition that like a terrible thing happened.
Yeah.
And like, this shouldn't be allowed to happen again.
Yep.
And like, we have to be vigilant that this never happen again. And I think before we can do the kind of things you're describing, America has to have the same reckoning with the history of racism in our country. And I think there's a lot of people for whom that is an uncomfortable conversation. It implicates their forefathers, relatives they never met. It goes back in time. And it's not a pleasant, but dealing with ugly moments in a country's past, it's never a pleasant thing.
Of course it's not going to be pleasant. Like, do you think talking about the Holocaust for Germans is pleasant?
Of course not.
It's got to be but at least they have the presence to say, oh my God, this was so insanely horrible what we did, that we need to rebuild the synagogues and make them better. And we need to let people know that Jewish people are welcome in this country and that we are ashamed of what happened here. And when we went to Australia, and you'll experience this when you go to Sydney, before any event occurs, public event, they say something about the indigenous people of Australia and how they pay tribute to them and the land that they allow the people of Australia to now inhabit at. And we had the same thing here with Native Americans. We did reparations for Native Americans. We were supposed to do 40 acres and a mule here. I don't know what happened to this concept, but all you do is look at the structural racism in education, how crime and justice is delivered, and in policing, it's a no-brainer that this is systematic.
It's just, I think it's hard sometimes to reconcile the idea that there are structural disadvantages with certain people with a pull yourself up by the bootstraps in highly individualistic culture. Those two things, I think it can be hard to reconcile. And look, I think there's people who benefit from the status quo. And some of them benefit actively. They seek to maintain it. Others, like I thought Kyle Korver's essay on privilege was really good. I think like it was a really interesting treatment of the subject from someone who's wrestled with some really hard questions and like come to, I think, a really healthy place.
Yeah. I think I had a blind spot for it too, because when I was writing my book, my wife was like, this chapter here when you write about being an outsider and how you fought your way into the industry, I think there was anybody else who was a little bit more of an outsider. I was like, my dad's a bartender, my mom's a nurse. I fought my whole way from Brooklyn here. Nobody wanted to be in this industry. And she's like, what about the kid with the single mom in Atlanta with 3 kids? And, you know, and I was like, yeah, I guess on the like spectrum of hardship, I was probably on the easier side, even as hard as it felt to me at times being broke, you know?
And I think part of the conversation, it shouldn't make you feel like you have to devalue your struggle. Like you had your own challenges, but there's one thing that does make me really optimistic, which is I think when I started in technology in the 90s, the whole investing was around like creating fundamental tech. It was about microchips and servers, infrastructure. I think now technology is accessible to a much wider pool of people because you don't have to build all the primitives from scratch.
Yeah.
And I think for people who've been outsiders for a long time, this sort of democratization of like creation is a really big deal. Like you don't have to go buy 50. I remember people would take the money they got from VCs. They would go buy servers and put those servers in a rack.
The first 100,000 went to the servers. Next 100,000 Oracle licenses, whatever. It was like, yeah, you really did need to get $250,000 set up with your T1 to just get going. So that was a huge hurdle. Now it's like, well, you could build your website on your smartphone.
That's right. And I think that's going to enable a set of people who would have never thought of themselves as being able to participate in tech to have opportunities in tech. And I see that already in our portfolio. We have a number of founders where they're just not technical people, but the thing that they're building is so low risk tech. They don't need 10 Google engineers. They need 3 capable people who know how to code.
3 mid-tier engineers.
That's right.
Just standard, average engineers. There's a new thing. I don't know if you've seen this yet. No-code startups.
Oh, yeah.
Explain to the audience what no-code startups are. I mean, it's pretty obvious from the name.
No-code startups are products that are designed to be so simple that no coding is required to get up and running with them.
Yeah. So you can use like SurveyMonkey and Zapier and Slack and just build the glue with different web-based systems, Squarespace, whatever, Shopify. Yeah, no, it is pretty amazing how that's changed. And the other thing that's changed is when we came into the industry, which I think was pretty much similar times, the 90s, like all the secrets were locked up at MIT or Stanford. And like you went to Stanford and they're like, by the way, look, here's the case studies and how this all works. And here's the course that you can only take here. Now it's like Coursera, whatever, you know, all the information is online for free. So now it's like, you can't say that it's not that the information isn't there. It's that people maybe what's in short supply now is the motivation to go actually take the online course.
And I think it's funny. I remember when I first worked at In-Q-Tel, we got business plans in the mail, like not PowerPoint slides, like full on business plans would come in the mail in big stacks. And I think back then there was so much asymmetry between like what an investor knew and what a first time founder knew. It was really unfair. And there were not communities. There wasn't podcasts. There weren't Medium articles. And when I talk to today, the number of times I talk to founders now who go, so I read this article. I'm like, uh-oh. I read this article about this new management philosophy. We're going to roll this out at our whole startup.
Oh boy, here we go.
And I'm like, oh no, please don't.
What was that one called? Holacracy?
Holacracy.
We're going to do holacracy. Nobody's in charge.
And
work on what you feel like working on. Really? I feel like playing Age of Empires and watching the Warriors game in the background while eating Five Guys.
And I don't want to pick on holacracy in particular, but I think this abundance, there's this abundance of information now where if you're new, how do you find the signal from the noise?
Oh, now it's too much.
Now it's amazing. Like it's too much. You're spinning. You read this article that says never do a safe. You see this article that says never do a price round. And you go, what? Both of these sound very convincing.
Yes.
Who's right and what do I do? This one, never have a co-founder, always have a co-founder, don't do remote.
Learn how to code, only do remote. Yeah, I call it founder pinball. Like we just drop them into the pinball machine. Ding, 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 ding. And it's like, oh, whoa, which way's up?
There's some of that for sure.
Yeah. All right, listen, Charles, thanks for coming on the pod. Thanks for the candid discussion. Thanks for sharing deal flow. It's been great to work with you. And if you're early stage, honestly, like the way I do invites now, just so you know, a little insight, we base our invites to our events. The reason why we've been so involved with each other, it's not just that you're a fan of mine, it's that we're fans of yours and how you do business. We look at the reports that come back from our founders and we say always to them, how did the meeting go? We follow up with our founders. And universally, the people we pick for the podcast, for Launch Festival Sydney, for everything we do is based on that feedback. And the feedback that comes back when people meet with you is they always feel that you've had something insightful, that you gave them the time, and that they felt uplifted or more positive coming out of the meeting. And it's so easy to be negative in this industry. I think that, you've really made a name for yourself by being thoughtful, right? And also positive, right?
Thank you.
It's easy to be negative in this world. No, it's just like one investor to another. Like you have this experience. You send somebody along to another investor and you ask them how did it go? And they're like, I'm not sure. You're like, what do you mean? It's like, well, they sent their associate. No, nothing bad about associate, but you kind of got to tell somebody that like you're going to bait and switch it. You're the partner you're sending to. And they were on their phone and they were 20 minutes late. And then the meeting was 15 minutes. And I traveled all the way from LA to come to Sand Hill Road for the meeting. And they didn't even understand the idea. And then they told me they had a competitor in their portfolio. And I'm like, what? Like horror stories, like the entitlement and the bad behavior on the part of VCs and just meeting and bedside manner is unbelievable to me.
We're very focused on what I call the defect rate at Precursor, which is the percentage of people who walk out feeling like, I don't want to work with those people again.
Ooh.
And I'm like, 1% defect rate for us is 30 or 40 teams a year. So
that's not good.
Yeah. So I'm like, we have to be laser focused on.
Yeah. And by the way, how vocal are they? It's like somebody who like, I don't know, you didn't seat them and they had a reservation. You didn't seat them for 2 hours or something, or like their food came out cold 3 times. Like they're just going to tell everybody that place sucks.
Yep. And I think occasionally we don't live up to it. I'm like, we just have to own it. And we will sometimes be like, hey, you did not have a great experience with us. And like, we're really sorry. And like, we aspire to do better.
Yeah, no, I mean, just keeping up with the volume of email you get in this business and just trying to be courteous on email to me is my constant struggle. Like when you become a super router, which I think you've become as well, it's like, how do you even deal with the amount of inbound? It's just bonkers right now. I mean, it's a good thing, right? Like a lot of people want to build companies, but the noise level, has it ever been this active in your lifetime?
Never. And I can't tell whether it's the ecosystem or the fact that pre-seed is such a thin market. Like we have the most number of people, I think, as a group, pre-seed investors seeking out our time, and the fewest number of people doing this full time as an occupation.
What happened?
It's because running
this used to be the most crowded beach. It's empty.
All the people who are successful have much bigger funds now, if they chose to. Like you've stuck to your knitting and have been like really focused and have built a great franchise. I think a lot of people who had $10 or $15 million funds, the management fees are not attractive.
Yeah.
And so you get bigger and you want more infrastructure, and suddenly you look up and say, our fund is too big to do the work we used to do. So this constant cycle at the bottom of people using pre-seed as a way to show that they have access and skill at picking, and then immediately vacating the territory as soon as they can.
Such a mistake.
Which we're not going to do. This is the work I was meant to do, and
I feel the same way. It's like it's so much fun to be the first investor or one of the first investors and see them grow from 5 to 500. Yep. Growing from 500 to 1,500, like it's really. I mean, I understand like it's growth capital, but it's largely the decision to do growth capital is based on who gives you the best terms. It's like getting a mortgage. You're I don't care what brand it is. I care what the interest rate is. Like brand matters for us.
And it's a different skill set. I have friends who are late stage investors and they're masters in pre-IPO financing and banker selection and audit. I got these skills I don't have.
CFOs, audit committee. I would be on. I was on the board of Dine, and at one point they're like, I was like the entrepreneur on the, this like $50, $100 million, Northeast company, and they're like, we're on your audit committee. I'm sitting there with PricewaterhouseCoopers, or Ernst & Young. I can't remember who it is. And they're like, we're going through this audit stuff. And I'm like, guys, should I really be on the audit committee? Like, this is really not what I do. Like, I can tell you how to like deal with firing a co-founder or hiring somebody or dealing with customers, but the audit committee? Am I really on the audit committee? I was on the audit. It was a great experience, but oh my Lord, was it work? All right, listen, Charles, I could keep you here for 2 hours. And I have. We're now into minute 70. Continued success. Very easy to find you. You're C. Hudson on the Twitter, and I'm assuming Charles at Precursor VC.
That's right.
There you go. All right, we'll see you all next time on Angel Podcast. Bye-bye.